The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Well, a small cap out with a bit of news today is AML3D. The company is expanding in the US as part of the AUKUS Defense Partnership. So it uses 3D printing to develop metal components, and it's just opened a new defense manufacturing facility in the state of Ohio. So the components produced will be used for US Virginia-class submarines, which Australia plans to acquire at some point, if Malcolm Turnbull doesn't manage to derail the project. And I'm just being slightly facetious there. So with our guests, Luke Winchester from Merewether Capital and Dean Fergie from Cyan Asset Management, let's get a view on AML3D. Luke, I noticed that this announcement had sort of the trifecta that's driving things right now.
Key points, didn't it?
Defense, manufacturing in the United States. Yeah. So what do you make of the company?
Yeah, they did hit all the key points. Defence, as you said, over in the States, they mentioned that tariffs won't be a big of an impact because they've got the footprint over there. But look, it's a thematic that, as you said, it's very hot now on the ASX and in global markets, defence spending and sort of products for military applications. This is not one I've ever looked at too closely, Nadine, but I didn't mind what I saw. There's a real product here. They're getting some real sales. Still very much in that early stage, right? Only preliminary sort of contracts. They're rolling them out to customers, but they're getting cash in the door. That's a good thing, and scaling up production to sort of meet the anticipated future sales they hope to get. They've just raised a big chunk of capital, $30 million a few months ago, so that balance sheet's pretty de-risked from that point of view. And now I think it's really about execution for these guys as this announcement sort of ties into opening the manufacturing facility. I am pretty new to it, like I said. A couple of questions I had was the split between upfront capital sales and recurring. So it sounds like they sell, a bespoke 3D printing Archemy, it's called, module to their customers. I couldn't quite see. Maybe it's a question for management if ausbiz ever speaks to them or investors want to reach out. But do they have that ongoing recurring? Mm-hmm. I suspect they do because they talk about selling wire additive materials. So there'd be some consumables that goes into the process. And the other question I had, you may be aware I own a business called LaserBond. I've been there for quite a while. Not quite a direct peer to these guys, but they tried to do something similar a few years ago where they were selling their proprietary IP to customers directly. And one of the problems they ran into was they found a lot of their customers had bespoke use cases for their technology, and when it came to actually building the modules, it was quite difficult because each customer required something different, whether it be some robotics or a different application, and it made the whole process quite difficult. So I'd sort of have that question as well. If we're talking about this Archemy system as an off-the-shelf, they're building them, they're selling them, off they go. That's a fantastic little business model. 75% gross margins are beautiful. If it's a bit more bespoke, maybe just be careful. And I'm talking from a pained laser bond holder who's seen that problem. It's sometimes hard to scale these businesses if you've got to customize each project for each customer. But look, I'll say a whole just because I am very new to it, but I liked what I saw here, especially that balance sheet being de-risked. It's something that for these sorts of scale-ups, it's usually a problem. They've solved that problem nice and early, which I like.
Dean, do you like the look of the balance sheet for AML3D?
Yeah, we own AML3D, which I don't know might be one of the reasons why it's not going up as much as others in the space. I mean, you look at what's happening in the defence space. Elsight's gone from 30 cents to $1.30. It's capped at 240 mil. AML3D is capped at 240 mil. Metal Powder Works, which is a new listing, has gone from 20 cents to $1.50 in the last 3 or 4 months. It's capped at 150. Titomic's capped at nearly 400. AML3D is sitting here at $80 million. Interestingly, a lot of the work they do is for the Department of Defence and specifically for the Virginia-class submarine. There was a big Four Corners article or piece on Monday about the shortage of staff or workers being able to produce parts for that submarine, and the fact that they're well behind in terms of their schedule. AML, again, I think Luke's right that maybe one of the issues is that they're just selling machines at a margin with a little bit of ongoing recurring revenue through consumables, but also through the technology to run the machines. The interesting thing is, though, that if they want to ramp these things up, they're talking about having basically what they call kind of printing farms of like thousands of machines just pumping out parts. So I think this thematic there is really, really strong, that you could end up with a 10-fold increase into the amount of Archemy wire additive machines that AML3 are providing to the US government for being a product in the submarines that's verifiably behind schedule. So I'm kind of be really surprised if this thing's not pushing a lot higher in the near term when investors realise the really strong thematics behind the business. So, obviously I'm talking my own book, but definitely a buy on AML3D.
Got it. Thanks, guys. So AML3D, a buy and a hold. Stay with us.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.